Hey everyone, welcome back to my Maverick channel, and here we talk about crypto content. We talk about trends in the cryptocurrency space. Currently in the cryptocurrency space, it's extremely important to analyze what has happened in the past so that you have better understanding of how to predict the future. So today, especially now in the bear market, so today we're going to look at some of the statistical analysis of what happened in the past, looking at the Bitcoin trend, because Bitcoin basically moves the market. So we're going to look at some of the trends last year to see how we can position ourselves this year, or at least prepare ourselves for the next bull market. So don't forget to hit that subscribe button, that like button, and stay tuned for the whole video. So of course, the first thing we have to look at when we're looking at the trend in investing or in cryptocurrencies, or I think generally in investing, we have to understand that there's a metric that's forming, and that metric is long-term holders tend to outperform the short-term holders or traders. So basically, if you do a lot of research, or you do a tremendous amount of research in the products that you're interested in, and you invest in these products and you hold them for a very long time, 3 years, 5 years, 10 years, or even until you retire, there's a good chance that you perform better than someone who's trading every day. And of course, we've had some announcements from these companies that are in charge of pensions and all these things, saying that some of their best performing assets or accounts are those accounts that were inactive, or the accounts that were unfortunately belonging to people that have passed away. So that level of inactivity actually helped those accounts to thrive tremendously in terms of their portfolio. So being a long-term holder not only states your conviction in the space, your conviction in the technology, but it also states to your prowess in terms of the research that you do. This report particularly was written in 2021 in reference to Bitcoin, to the Bitcoin downtrend that happened in May. So there was some Bitcoin sell-off that happened in May, and this report analyzed that. I'm going to look at some charts in this video, trying to keep it short to see some of these trends and to analyze why being a long-term investor in this space is extremely important. Of course, I'll read this first introduction of this article because I think it's extremely important and it will bring a lot of things to light. So the Bitcoin market experienced one of the most significant liquidity events. Guys, remember right now we're in the bear market, so it's important to put these parallels together. So this was in 2021 May, and we're currently in May 2022. So these liquid events and price drawdowns since Black Thursday on March 2020. So this capitulation event followed a multi-month long consolidation above the $50,000 range. Guys, remember right now we're around 28,000-ish Bitcoin price, and it was initiated after the market failed to sustain new highs in response to the much anticipated Coinbase direct listing. At the time, Coinbase was going to list itself as a publicly listed company. So there was a lot of excitement in the market, which means if you're a long-term holder and you see this excitement coming in, you could see that as an opportunity to sell off. So it kind of makes sense. So the worst of the sell-off on 19th of May printed the largest daily candle in Bitcoin history with an intraday price range of 11,506. Bitcoin's price fell a total of 47.3%. Much dramatic downside price action took a large cross-section of the market by surprise, especially as this event occurred during Bitcoin's most widely observed bull market in history. As such, it has many wondering if the bull market has been cut short and whether Bitcoin has returned to long-term bear market structure. Guys, remember this was in 2021. Fast forward, we saw Bitcoin actually hit 69,000, so almost hitting 70,000. And basically, what I'm trying to say here is that tracing the bear market is extremely hard, and also predicting the bull market is also extremely hard. By looking at these analytics, you kind of develop that intuitive ability to kind of see where these things are going. One of the charts they put here was Bitcoin spent outputs aged 6 months to 3 years. So you can see we have slowdown in terms of the Bitcoin spent, and you can see these fluctuations in prices. There's a slowdown, there's a consolidation, sort of flattening in, and then at some point, maybe 6 months, 12 months later, 3 years later, you see a spike up. So the general trend in the prices of Bitcoin, even if we're in a bear market right now, we don't know how long it's going to be, generally it tends to fluctuate upwards, and that falls into the narrative of being a long-term holder of Bitcoin. We have some other charts that these guys, basically this article that I'm reading today, making a good introduction of this, is written by Glassnode, and many of these articles are premium articles, but this article, given the age of it, we can access it for free. So you can see there were also grayscale holdings during that time. This goes into spot trading Bitcoin, future trading Bitcoin actually. So you're not really buying the actual Bitcoin, but rather the future of this Bitcoin. So during that time, there was an increase in interest of the premium Bitcoin, basically Bitcoin being purchased at a premium price, and then trading discounts, but then there was a flattening price there. This is going to make sense as we move forward. Of course, the way to analyze this was GBTC, which is the Grayscale Bitcoin Fund, where they trade in futures. There was popularity, demand for it, but then later we saw a decrease in that demand, and you can see right here, 23rd of February, there was a drop in the demand. So basically you could purchase the Bitcoin at a discount from these people. So you can see these trends prior to the sell-off. You can see there was a lot of liquidity flowing out of Bitcoin, rather flowing into the exchanges so that it could be sold. So here we can see that Bitcoin Purpose Bitcoin ETF, this is another exchange traded fund, just like the Grayscale. You could see that the purpose traded outflows, this is the analytics of this, were reducing. So if you want to, if you're a serious trader, if you're huge company, serious company, you may want to have access to some of these analytics tools out there. So this could be actually a very good platform, the Glassnode, to have access to this if you want to go real pro. They also had charts that basically talked about or listed liquid supply change. And you can see here the net accumulation of Bitcoin. This essentially what this means is Bitcoin that's ready to be liquid. So you could move your Bitcoin to an exchange or a centralized exchange or over the counter, but this is mostly centralized exchange because that's where most of this information is accessible, easily accessible. So you can see an increase. This was around July of 2019, all the way moving forward into 2020. You see increases in supply of Bitcoin ready to get sold off or ready to be liquidated, and you can see the result, net distribution, which is saying liquid, which is off the exchanges, which means it's illiquid, moving, following this curve to become liquid, so moving on to exchanges. So this is some of the terminology you want to familiarize yourself with if you're looking at trading Bitcoin or holding it for a long term, or if you were to apply the same metrics to the cryptocurrency space generally, because they tend to go up as Bitcoin goes up. And you can analyze these charts to see that general interest in liquidity as the markets go. And then prior to the collapse, a lot of Bitcoin was essentially a lot of, you can see the rate of negative 175,000 Bitcoin, 30 days becoming liquid. So you can see the trend here. Over 175,000 Bitcoin became liquid, which means they were being sold off. The green charts represent the liquid Bitcoin tending to the illiquid charts. So this shows the fear or the capitulation within the market by analyzing the statistics. Another chart they put here was the net transfer volume from and to exchanges. This is a very important metric to look at because normally when a lot of people transfer their Bitcoin to exchanges, chances are they're looking out for those stable coins. So converting their Bitcoin back to stable coins to protect themselves from the potential downward movement, which is normally caused by excitement. When people get in, they're seeing Bitcoin price go up. And then the long-term holders, they figure out that's an opportunity to sell off maybe a bit of their chunk and they can buy back more when the excitement has gone down. Of course, these charts note the net transfer volume from or to exchanges, and you can see accelerating outflows as prices decline and acceleration of deposits leading to sell-off. So more Bitcoin deposited to the exchanges normally means that a lot of people are interested in selling it. There's other things like percentage balance on exchanges, and we look at different balances of Bitcoin or cryptocurrencies. These are some of the metrics you can look at. For example, here they're analyzing March 2020. You see a declining trend in the percentage balance of Bitcoin. There's a sustained downtrend, and these downtrend statistics normally point to a reduced interest of the institutions that are investing in this space, reduced interest in some of these products, or an anticipation of a market downtrend. So you want to see what some of these institutions do as you get into this market. They had some really amazing charts as well, like the balance on exchanges. So basically what this means is that there's very many big exchanges, but Coinbase and some other exchanges didn't realize a similar flow of volume or flow of Bitcoin onto them, maybe because they're regulated by the United States or there's not very clear regulation. But then other Bitcoin exchanges that are quite established, like the Binance exchange, like Bittrex and Bitfinex, actually recorded around the same time an accelerated deposits of offshore exchanges onto their Bitcoin exchanges onto their exchanges for whatever reason. I guess people are anticipating to sell off. So you want to look at different exchanges and their different metrics, look at the volume and try to analyze the market. Just like investing, you want to diversify. Also analyzing these tools, you want to analyze different platforms and reach a conclusion that makes sense to you to make an educated decision. Make sure you always want to position yourself, especially to be a long-term participant in this space, because cryptocurrency is way more than just speculation. So they further look at some of the balances on exchanges like Bitstamp, Coinbase, Gemini, and Kraken, and this puts, you can see the comparison, some of the exchanges offshore accounts increased amount of Bitcoin and then a reduced amount of Bitcoin during the sell-off. So if you were just looking at Coinbase, Gemini, you might have maybe gotten confused. So you also have to analyze some of the other big exchanges like Binance to try and get that third eye or overview of what exactly is happening. So they're going to put in some of the statistics as well, like exchange deposit fee dominance. So at this point, people no longer care. When people are scared, they want to sell. They don't mind paying any amount of fees, any amount of exorbitant fees to post their cryptocurrencies onto exchanges or to deposit them there. And as a result, of course, they're capitulating. They want to sell off. So you can also look out for metrics like increased fees on exchanges, or if people don't mind paying high fees on different blockchains or on exchanges, that also sometimes could be a red flag, or it could indicate something within the market. Maybe the market is bullish, maybe it's bearish. So future open interest, these are some of the things that happened. You can see here, basically these are different exchanges. Kraken is an exchange, Bitfinex is an exchange, BitMEX is an exchange. All these are different exchanges, and you can see their volume right before the capitulation. They can say the futures open interest. These are futures market where you trade on the future price of Bitcoin. A reduced interest also sort of basically mapped out to a surge in the rather downtrend in the Bitcoin price. And it's very important to look at some of these metrics when we're looking at the current market structure. Of course, this conclusion, we shall see a conclusion to this if you've stuck around to this point. The other charts here, like stablecoin price. Normally, when you're going to see a downtrend in the market, you see some of these stable coins like USD Tether, USDC trading above their actual $1 peg, however slight that might be. That could show a very huge interest in the stablecoins, which normally means that the market wants to liquefy their assets. Maybe there's too much excitement, so there's a lot of demand for the stablecoins just in case of anything. And you can see here all stablecoins were above the $1 peg. Demand for exit liquidity, because the stablecoins are kind of establishing themselves as those liquidity hubs or liquidity safety pots that you can deposit your crypto onto in case of a market downtrend. Then you can buy back. Some of the important charts here as we conclude this, we have stablecoin supplies versus Bitcoin supply. You can see an upward trend in the stablecoin supply normally led to a Bitcoin price downtrend. Guys, you have to take all these statistics with a grain of salt. But however, it's important to note these things, especially if you're an active trader or if you're a long-term trader or a long-term holder of these technologies, but you have a separate bag for trading. So knowing some of these statistics is quite important. Stablecoin supply ratio as well is important. So this shows how much stablecoin is in demand, how much of it is in supply. So you get a ratio here of Bitcoin. They show you Bitcoin market capitalization is equal to 7.5 times larger than the stablecoin supply. So when these markets are moving, there are times you see a much more printed stablecoins than before, and this ties into the demand or the increased demand of these stablecoins. And you can look at this metric, like why is there increased demand of these stablecoins right now? Maybe the market is becoming more aware of the increased price movements in the cryptocurrency space. So you could use as a point to start to sell off some of your assets. So this is what this article was alluding to. Hodler spending behavior. Finally, we will investigate the spending versus hodling behavior of the market. In particular, we will focus on the balance between new investors who have to be relatively new to the volatile and FUD fueled world of Bitcoin. So what's essentially this means is that when you see these trends, normally new investors come in, and this is normally a signal to start selling off. So this is what some of these institutions do. Some of the long-term holders that have their separate bugs for trading. So you can look at some of these metrics like spent outputs aged 6 months to 3 years. We've looked at some of these over a trend. For example, here they had a chart between January and May. So 29th of April, between May, you can see that the spending pattern increased. Stable baseline. So you can see the Bitcoin price USD chart, the spent output lifespan, the Bitcoin spent output lifespan. So these are basically, spent output is how much Bitcoin you're going to spend or liquefy, or how much Bitcoin is actually held in the wallets without being spent. And of course, you can see different fluctuations in the prices, but there's different metrics you have to look at, like the stablecoin demand, how much Bitcoin is flowing onto centralized exchanges. What is there news that's very excited in the current crypto market space? Maybe there's a company launching something. So there's some of the metrics to look at. Normally when everyone's excited and selfish and greedy, that's the time when you have to be fearful. And when everyone's fearful, just like these moments, that's when you have to be greedy. But that's not investment advice. So, but you have to look out for some of these things in order to protect yourself in this space. And then we can see the spent output again. This goes into how much Bitcoin is being spent as opposed to old coins. So some of the OG coins like Ethereum, Monero, Litecoin, they normally have a lot of interest because they have OG or long-term investors that invested them in the past. So normally these people sell off these tokens and invest in the new tokens as the new money is flowing in. Sometimes they call that dumb money. So when these new tokens have been primed, some of these old investors form out of those tokens and then buy back those old tokens because they understand or believe in the true value of those tokens. So sometimes seeing the older tokens go up in value sometimes could be a signal that there's some potential change within the market, but also sometimes people use that as a trading strategy. And here just generally shows a trend in the Bitcoin market. You can see in 2011 there was a Bitcoin top over there. We had a consolidation, which at the time seemed like a lot, but then it was a lot, but in comparison or in retrospect, you can see 2013 there was a much higher top. 2017, these tops are way higher than you can see here. But actually, when you zoom out like this, you can realize that the potential to make tremendous gains in the cryptocurrency space keeps reducing over the years. 2011, a tremendous pretty much Bitcoin from zero to whatever price it was, thousands of gains. 2011, 2013, thousands of gains. 2013, 2017, thousands of gains. 2017 to 2021, kind of thousands of gains, but you had to have a bigger initial investment in this space. So you can see the trend that a long-term perspective actually plays out better as opposed to short-term holdings, and some of the metrics as well that show the general interest in accumulation of Bitcoin. For example, realized market capitalization of hodling or holding all your Bitcoin, and these are different waves over the years. 2011, 2015, 2018, you can see an increased interest in this space. So doing your research is very, very important because you understand the importance of doing long-term, of being a long-term holder in this space. If you don't have the stress of actually the stress that comes from getting involved in things like the bear market. These last charts are signaling the colors here are capitulation, basically where people are so scared that they sell out. We have orange here showing hope. So sometimes people capitulate and sell out, and then those that do not sell, the market goes into orange, so they have hope. And then into yellow, deep yellow, or rather lighter yellow, you go into optimism, and then belief. So people believe in there might be a market recovery, and then unfortunately the market does that, it drops. So this is sometimes called a dead cat bounce, or this is sometimes referred to as a bull trap, where the short-term holders think the market is recovering, but really it's just a trap to capture that last liquidity. So you can see this trend 2013, 2018, the bear, March 2020. But if you look at the grander scheme of the prices in the cryptocurrency trend, especially we're looking at Bitcoin right now, it has had a positive trend. So there's some long-term holders that are truly benefiting from this, as opposed to, so this is short-term holding, and you can see the metrics here. And then when you go to long-term holding, you see more of you go right into the euphoria stage, where you can see there's the normal metrics which we've seen: capitulation, people sell out, there's hope, there's the euphoria phase where people start to get greedy because they think the market is going to completely blow out of the park. It's going to go beyond what is realistic, and then you start to see capitulation in the market because the long-term holders are actually selling off some of their profits, and the short-term holders tend to get in right at the blue mark. So these are very dangerous points for new money, but extremely profitable for some of the long-term holders. And lastly, they make a conclusion for the bears. Essentially, the bears are the people that are betting on a downward trend in the market, so they're selling. So institutional demand clearly softened from February, and the balance on exchanges also increased, which means that more people were willing to sell their Bitcoin. The stablecoin prices leading into the Coinbase listing suggested distribution was underway, and old hands were spending immediately prior to the sell-off. So this whole excitement presents an opportunity for some of these long-term holders to finally take out that profit. So a huge volume of short-term holders remain underwater. So this was way back, just like right now, the current situation, a huge volume of the short-term holders remain underwater, and the long-term holders are still bullish, but it's still very shaky because we're on the edge. Then for the bulls, so these people that are bullish on the market, on the upward trend of the market, institutional products like the GBTC Trust Fund, the Purpose ETF, then are showing signs of recovery. So seeing signs of recovery. So whilst exchange balances have increased, so an increase in exchange balances, a more nuanced view indicates a difference between US regulated and offshore exchanges. So expect different activities, just like we've seen between Coinbase, which is a US regulated firm or exchange, and Binance Exchange, which is outside of the US jurisdictions, but is a well-established juggernaut in the crypto space. Then stablecoin prints have expanded dramatically. So you see an increase in the stablecoin. So creating the largest crypto native dollar buying power on the sidelines in history. So more stablecoins, it means a lot of cryptocurrencies can be bought. So you have to look out for these metrics. More stablecoins, chances are there's more cryptocurrency that's going to be bought. So a lot of these metrics are important when you're looking at this space. And the majority of selling appears to have been short-term holders, whilst long-term holders appear to have bought the dip. So this article is in favor of long-term holding, which means you have to do your research to understand where you are. And lastly, few have made the claim that hodling Bitcoin was easy, and for many, the volatility seen last week is all part of the ride. What is clear is that the sell-off was of a significant scale, and the large volume of the buyers are currently underwater. How the market recovers from here will no doubt be a test to market conviction amidst what continues to be a favorable macro backdrop for digital scarcity. So this was a year ago, where the market was scared that there was going to be a major drop, and then there was news that came in that primed up the market. Basically, the market was still sustainable. People were selling NFTs, DeFi was still operational, but now we've seen a more massive bear market setting right now. So you want to look at some of these metrics to see how you can predict the future, especially right now. And the last point is, make sure you do your research and always try to have long-term bags. And if you want to be a trader, maybe you also want to have a short-term strategy depending on your financial situation. All right, guys, I really hope you learned something from this video, and I'll see you on the next one. Take care. Bye-bye.